at the Disney earnings, which are out. I'm not quite sure about the bottom line, whether that's comparable. They're reporting an adjusted 8 cents profit. But let's look at the revenue number for the quarter, coming in at $11.8 billion. That's a disappointment compared to expectations for $12.43 billion. And it comes out, in particular, the miss on direct-to-consumer and international, which, of course, is meant to be an area of growth and an area that perhaps could have done well despite the current environment. That came in at $3.97 billion. The forecast there was for $4.6 billion. We're also seeing a little bit of a miss on the parks, experiences and products, which has already massively lowered. The expectation was for $1 billion. They came in at $983 million, so a fractional miss there. Media and networks came in just ahead of expectations. $6.5 billion. Forecast was $6.3 billion. And studio entertainment came in line, $1.7 billion. So it was that direct-to-consumer line, just a slight miss there. Just under $4 billion. The forecast $4.6, which accounted for that revenue miss. And Sarah, we're seeing it move after hours lower, but not too significantly, about 1.5% lower.
And Bob Chapek, in the announcement, the CEO does call out what he says: we're continuing to build the incredible success of Disney Plus as we grow direct-to-consumer business. He also puts a number here. He says the global reach of our full portfolio of direct-to-consumer services now exceeds an astounding 100 million paid subscriptions, which he calls a big milestone. So that is actually the first quotation from the CEO, which sort of shows their priority and what they want to highlight here for investors as far as what he says is the key to future growth of their company.
Julia Bawson's been diving in a little bit deeper. What stands out, Julia?
Yeah, I think that Sarah's absolutely right there in pointing to the fact that they give an aggregate number for the streaming subscribers. It really indicates their focus on being able to go direct to consumer. Disney Plus ending the quarter with 57.5 million subscribers. ESPN Plus 8.5 million streaming subscribers. So that's up from just 2.4 million in the year ago period. Also Hulu, 32 million in terms of SVOD of the streaming VOD. Hulu's total subscribers, 35.5 million. So those numbers really pointing to where Disney sees the future. I do want to pull out here the impact of COVID, particularly on the parks business. They say they estimate the total net adverse impact of COVID on separated segment operating income on the parks business was $3.5 billion. But in terms of studio entertainment, there was actually better than expected results in terms of streaming video on demand. So that operating income just decreased by 16%. It was expected to decrease more than that. And then there was, in terms of the bottom line, the media networks division benefited from having the bottom line results benefited from having lower production costs as well as lower marketing costs. So you saw the segment operating income in the quarter at cable networks actually increased 50% and broadcasting increased 55% on some of those lower costs.